My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. God be one friends. I'm just trying to make you a little money. My job, not just to entertain, but to educate, teach, put in context. Call me 1-800-743-CNBC. Tweet me at Jim Cramer. After a day where we got pleasantly cool inflation numbers paired with some suboptimal earnings, the average only didn't do much. The Dow inching up 60 points, S&P dipping 0.07%, Nasdaq declining 0.36%. Will that pattern continue? I want to get into the game plan for next week, but first, memo to corporate America. What the heck are you doing reporting next week? So many companies tell their stories next week that nobody's going to pay any attention to you, and you deserve better, especially that Wednesday Fed meeting where a single errant comment on the strong economy could wreck the entire bull thesis. Then we get the labor report on Friday, the most important piece of data out there. We got to suss through that thing. I know these CEOs aren't going to listen. They don't seem to understand that they can control the stuff and simply report on a different day or week. But I hope you'll listen when I say please don't take any immediate action on any company that reports next week. You won't have enough information, and the market will send you so many misleading signals that your win percentage will be dramatically reduced. Now, with that caveat out of the way, let's deal with the calendar of events and what you need to watch for, not act on, but watch for next week. Monday is Steel Day. That's right, when we hear from Cleveland-Cliffs and Nucor. And, two of my favorites. After the Fed took rates up so quickly, normally steel pricing would have been crushed. I have seen steel companies go bankrupt when the Fed does this kind of thing. But we don't have many steel companies left, and the ones we do have are pretty strong. And these are, well, let's just say they all seem to want to merge with each other these days, as we know from Nippon Steel's move to buy U.S. Steel. Nucor and Cleveland-Cliffs have enough business to keep the pricing up, and I think both companies have tremendous scarcity value, although Nucor's balance sheet is far better than Cleveland-Cliffs, just so you know. Again, not for Monday's trading, but you have to like businesses that are protected by the U.S. government, and nothing's more protected from overseas dumping right now than steel. Tuesday morning, Pfizer reports, and I'd say it's too soon to assess what the company is doing with its giant acquisition of CGen. That is the story right now, and we have to hear the prognosis. General Motors also reports Tuesday. Now, we no doubt will hear about slowing sales, the derailing of the Cruise autonomous driving unit, electric vehicle ennui, perhaps. The good news, that's all baked into the stock. The bad news, GM stock is incredibly sensitive to interest rates, and if Wednesday's Fed meeting is filled with tougher talk, this stock will go down no matter what Mary Barra says. Could even get hit harder if Friday's labor report shows a big jump in wages, because that means no rate cuts. After the close, we have a classic example of the corporate traffic jam that tries to give me a heart attack every 3 months, as Microsoft, Alphabet, Starbucks, and AMD, and of course many others I'm not going to mention, all report at roughly the same time. Each has a salient piece of data that can move them. Microsoft needs to tell us about its Copilot AI sales. Alphabet needs to put up better cloud numbers. Starbucks has to address the bizarre pro-Palestinian protests of their stores. I say bizarre because Starbucks has no particular connection to Israel in general or the war in Gaza in particular. Look, I support peaceful protests against companies that you believe are complicit in oppression. I did it myself when I was much younger. But whenever you stand on this issue, Starbucks honestly has nothing to do with it. The whole thing's crazy. Unfortunately, they must address these protests on the conference call and how they hurt the quarter so we can try to figure out whether the company can make a comeback from it. As for AMD, it just has to reveal that it's taking huge share from today's true ne'er-do-well, Intel, and then it's off to the races. Wednesday, Fed Day, and I'm looking for any clues that the Fed's willing to cut rates if inflation keeps coming down, assuming the economy stays as strong as it is. Those who say that they know definitively what they're going to do, don't listen to them. They don't know anything. In the morning, we find out the damage Boeing's going to have because we thought that they could finally clean up their 737 MAX inventory, and now we're not so sure. Boeing's back in purgatory, but once we figure out how much purgatory costs, the buyers will flock right back into the stock because there are only two large-scale commercial aircraft makers, and the other one has no inventory at all. American Express crushed it today and gave you a forecast that was so much better than expected, and stock shot up 7%, literally taking the Dow Jones average with it. Will MasterCard give you a similar set of numbers? MasterCard's actually a lot more like Visa, which reported a just okay quarter. I think Maz, I call it, will have better results as it's been putting up consistently strong reports. But like everything else, it's a wait-and-see situation, but I have long admired MasterCard. Thursday, I'm just calling it insane, people. Honeywell reports in the morning, and we need to see if it's going to reshuffle the portfolio now that it's just buying the security division from Carrier. I'd like Honeywell to do something transformational, as its portfolio feels a little unwieldy to me. Next, Merck is the best cancer drug of all time, and I want to see what Keytruda is being used for next. Thursday night, pandemonium. Look at this. Amazon, Apple, and Meta platforms all report at the same time. Again, the key metric. We want to know how much Amazon made on advertising. That's the third leg. You know, we've got the retail, we've got Prime, and we have unbelievable Amazon Web Services, but it's the advertising I'm focused on. Apple's about iPhone guidance for next quarter. We don't even care so much about this quarter. And then anything China. Meta's about ads, reels, and any product from the metaverse. Oh, Lordy, who told them to report all at once? Do any of these companies actually think that they'll have our undivided attention that evening? Please, at least one of you, change your earnings cycle. It's not fair to you or your investors. And more importantly, it's not fair to me. Friday, 8:30 a.m., we get the employment report. And I think if this economy doesn't start putting up a 4% unemployment number, meaning some more serious layoffs than we have, then barring some explicit statement from the Fed on Wednesday, we can take the idea of a March rate cut right off the table. I believe the Fed's worried about losing its credibility if they cut and then we get some hotter inflation data, which is certainly a possibility. The aggregate economic numbers need to grow cooler still before the Fed will take action. Friday's also oil day. For the longest time, Chevron repeatedly bested Exxon in earnings and replenishment and cash generation. That's not been the case for the last couple of years. We'll examine both, but I think Exxon has the edge once again. By the time we get through next week, we'll have a pretty darn good sense of how 5 of the Super 6 are doing. Remember, I canned Tesla last night, gutting the whole Magnificent 7 storyline. The Super 6-pack is so important to this market, and we'll do our best to give you a read on them. But the bottom line, you should expect that next week will overwhelm even the best of the professionals. So don't even think about doing anything yourself unless you've already made up your mind beforehand and don't care about your short-term performance. I want to go to Glenn in my home state of New Jersey. Glenn.
Big booyah from New Jersey. How are you, Jim?
Man, we love Jersey and we're doing well. How about you?
Want to know about GLP, buy, sell, or hold. I hold it in my portfolio.
Interesting company. Candidly, not my favorite. But I don't want to prejudge. And the last time I looked at it was a little bit before we had some, what I regard as being some problems in the Red Sea. But refined products, this stock has had too much of a move, sir. The refined products companies that I like do very, very well. And the one that's best is Sunoco. Thank you, Rusty Brazil, for that excellent piece this morning about how good Sunoco is. Let's go to Patrick in Texas. Patrick.
Booyah from the sparkling city by the sea, Corpus Christi, Texas, Jim. I'm a first-time caller, founding investment club member, long-time listener. Ever since one of my economics students came up to me and asked me if I'd seen the informative, zany, and funny Mad Money on TV. And since then, I've been a devotee.
You're so kind, Patrick. You know, it's a long week. And I just finished my week on a good note because of your phone call. Thank you.
Oh, thank you. And if I could just give a shout-out to my past and present economics students in business economics at Texas A&M University, Corpus Christi. Thank you for that.
Oh, my God. I want to do the show from Texas A&M. Texas A&M is just fabulous school. So thank you. Thank you. Absolutely. That shout-out is a good one. How can I help you?
Jim, I wanted to ask you about organic and plant-based oriented grocery stores. We have two in our little town, Natural Grocers, which I believe is too small to discuss on this show, and Sprouts Farmers Market, SFM is the ticker. It's got about 400 stores, mostly in the southern part of the country. It's always been seen as kind of the poor cousin of Whole Foods, but since they got new management in 2019, they've really started to change the shopping experience there, and I think the stock price movement reflects that. It's up nearly 60% over the last year, with the PE still at around 17.5. So do you think it's time to ring the register on this one? Or do you think it has more
Patrick. I think you correctly encapsulated everything here. It's got a much better management team. It is doing quite well. It's profitable, it's growing, and yet it sells, as you mentioned, for only about 18 times earnings. I think it's still a buy, and I've been to one. I haven't been to 10 of them. I've been to one, and I think it's a darn exciting place to shop, frankly. Right? So many companies tell their stories next week that nobody's going to get the attention they deserve. So I hope you'll listen when I say don't take immediate action on any company, even if it sounds terrific next week. On Mad Money tonight, Tesla's feeling the post-earnings pain, so are investors starting to come around to the idea that there are more EV plays out there that are worth watching? I'm sitting down with the CEO of Rivian from the company's outpost in Williamsburg, Brooklyn. And we even got a pretty cool test drive, frankly. You won't want to miss it. Then FICO was the 14th best performer in the S&P 500 last year and has been an amazing performer for years and years. Should investors expect the same out of the predictive data and analytics company in 2024? Particularly because it just got shelled last night. I'm going to talk to the company's top brass. And with the new CEO at the helm, could McCormick add a dash of spice to your portfolio? Do not miss my exclusive. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.